Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. All right, folks, here we are on Tuesday, February 11th. We're going to take an updated look at apps today. So last time we looked at apps, which was not very long ago, we were speculating on whether or not it could come up and fill this gap, and it has done that and more. So I've extended the levels that we had on the last chart, and you know, they were sort of looking at, if you're a gap hunter, on the daily chart here at least, the next gap is way up here. So we might have some work to do before we get any interplay with this gap. But just know that this is up here. It would get into it at like 1147. And it would fill it all the way up here at like 1402. So it's a spicy one. It's a bigger gap than that. It had dropped this day when it created this initial gap almost 43%. So tremendous range there, but it partially filled it, as you can see, and then fell quite a bit. So it has filled this gap up to like the low fives, and that one had also partially been filled, right? So we talked about that last time as well. And then obviously this gap that it had left a couple of months ago, or a few months ago at this point, that was down again almost 45%. So just like tremendous losses over time. Now, like I said, it has filled those two gaps pretty recently. Just keep in mind, on this big jump here, it did leave this gap. So on the downside, if it were to come down, it would get into this gap at like 311, and it would fill it at 262 basically. So that's quite far away, but just know if it's wanting to fill a gap to the downside, I know there's a lot of good info out there on gap filling, upside versus downside, so you can research that yourself if you want. I've spoken about it in many videos, but just keep that in mind, that is down here. This day alone, on the 6th of February, it jumped over 96%. So just wild day after wild day. Because of the way that Webull structures it, this green candle is actually a red day. It was down 1.8%, and then yesterday it was up almost 10, and then today up, a very simple 1.3%, a very conservative number. So it is up into this $5 range, and like I said, the extension levels that I have now on the chart, since it has filled this gap, it is useful, I think, to keep the gap fill level in mind. Maybe I'll put that on here just as a reference point, but this is the gap fill level. I'm going to put this just as yellow so it stands out, but this is where it would have filled the gap. So if it wants to come down and interplay with another level to the downside, that could make a lot of sense. Not only because it's the gap fill level, 503, but because that approach is toward the $5 level, psychological level. It would make a lot of sense that if it wanted to reconfirm, add some volume in that range, that's where it could come through. So very, very tight into this what do we have here? 508. Yeah, I'm reluctant to leave this yellow here. I'll leave it for now. I just hate when it seems like it sort of unnecessarily clutters the chart. But if you zoom in, you do see how it's been playing off of these levels. So right here, coming up off this 242-ish level, worked through a bunch of these, came back and sort of paid them their dues. We see that a lot, where it sort of jumps through, comes back, pays its dues, even if it doesn't leave a gap, and then some rapid motion right where you would expect it to happen, right? There's a big percentage gap here in the levels from, say, 344 up to 407, and that's exactly what it worked on. And then here's where it got the gap fill. Ultimately, right, this last 10-minute candle of the day, I guess, on February 6th. So congrats for wicking up there on the last candle. But then you see, it struggles with that gap fill level, 503, and that near in 509 level that we have on the extension. And then up here, comes in and just bang, like just about to the penny, or like to the fraction of a penny, comes through the pre-market. This was today, pre-market today, banging right off of that 508, 509 level that we have. And, through the day, nothing tremendous, but respecting that level nicely, and for now at least holding the hovering motion above it. So to the upside, I have 611 basically, right? There's all these fractions of pennies, that's why I'm rounding as I go, 610 and a half. And then if we press up here, I have 674. So that could be sort of some motion on the way. Obviously this zone here will be pretty spicy for it if it gets up there. This stretches from like, yeah, it'll basically be that. It'll be potentially a long drawn out, percentage wise, like zone wise, it'll be a long drawn out battle for 7 is what it looks like could sort of take place, because this zone stretches from the high 6s, like 680s, all the way up to like, the brunt of it is like here up to like 710, maybe 720. But that 30 to 40 cent range is a pretty big percentage range. So I wouldn't be surprised if it puts in a ton of action there, or if for some reason it does kind of press through there relatively quickly. That would be a very logical place for it to come back and like I said before, pay its dues, where it comes down to put in a bunch of additional price action, make sure that buyers want to actually buy up in that range, versus, let it kind of fall right through. So that I think could be a very, very interesting range if it gets there. And I only mention it because, it certainly stands out, but also, that would be the next area, the next range above that 674. So things already getting a little bit tight in, right? 611, 674, after you have some of these big percentage gaps in here where it can move relatively freely, if you will. And then, things get a little sticky above 6, a little bit stickier above, mid 6. And then I think we'll get really sticky on that approach 2 and through 7. So that's my look on the levels. EMAs wise, I don't know if we get a ton. Yeah. So the only thing of interest, of note to me, because it's so far away from the 8 EMA, but it is interesting that now the 183 EMA, the all important, right? This is where it was hitting resistance on these relatively normal days where it had volume 1 million to 3 million to 2 million, so on and so forth. And then, it jumps up on this day to almost 8 million. And then we get 121 million on this day, and then 25 million, and then 15 million, and then 9.5 million today. So, that bump in volume pulls it, is what gets it through that 183. But that gap, again, that gap to the downside now is situated just above like the 183. So again, I if it does get yanked down there, we'd have to see what would happen. But just note, I guess I won't say any more about it than it is there, because it is so far away, right? I'd have to have tremendously harsh day to get cut in half. But it's happened before. We talked early on in the video about a couple of days where it was down 45-ish% and whatnot. So, but of note with the EMAs here, besides it being above the 183, is that the 8, the 21, and the 34 have now crossed over the 183. So we've had bullish crossovers of all short-term EMAs over the long-term EMA, and that's as good as you can ask for, especially in a stock that has price action that looks like this, right? Just tremendously rough go for the bulls for a very long time. This is about as good as you can ask for to start with. You see on this last push where you got price action above the 183, you didn't get these bullish crossovers. You get like a very lackadaisical motion there, right? That looks nothing like this, right? This sharp, very steep crossover, pedal to the metal, bullish momentum, definitely dominating the course. And so that's what you would want. Now, I would sort of say, be aware of this volume dying down, and if it continues to die down more and more, at some point, it might be a little tough to sustain these gains if the volume kind of dries up. So we'll see if anything kind of crops up to help influence additional volume, in the days ahead. But yeah, it's just relatively thin up here at the moment. You see if we sort of press back here, I mean, even, back here, just relatively thin up here where it is. This green line is where it is. Things obviously start to fill in. We come back here, but I don't know how many folks who would have been engaged in this previous volume would still be holding today. So, looking something like this probably makes a little bit more sense. Order flow wise, so almost 100% of shares are profited as of close today per the Webull data, at least. And so that would, make me question that, probably a lot of those folks that contributed to that volume previously above the gap dumped, right? And that's how you get a tremendous sell-off like we saw. So that buying pressure just not outpacing the selling pressure, and so a bunch of those got turned over, and now those folks who had cheaper shares are profitable now that it's gone back up and filled that gap. So that would make a ton of sense. But the question then becomes, again, with that diminishing volume, I would worry, okay, do these shareholders that are very profitable, or at least somewhat profitable at the moment, do they start locking in that profit? Versus, like, where's the additional volume going to come from, I guess is my question. Where's the volume that's going to contribute to taking this to 6 and then pressing into that, sticky 7 range that we talked about? Is it going to come from new investors jumping in? It's going to be from folks kind of dollar cost averaging up? I don't know. Are there going to be some large scale orders that come in? It's not impossible, but I mean, this is not a shockingly high large scale order, and that far outpaces any of the others over the last 5 days. So that sort of becomes my question. Where's the volume come from? Because we're already seeing the volume dying off substantially the last several days. So that would be, probably my biggest question in terms of something that feels maybe a little less chart-ish, but obviously volume is still a factor on the chart. We're looking at it on the chart. Good call out here by the TTM squeeze indicator. We had trigger, fire, re-trigger, refire, and that's when we get the action. We see it time and time again. Now, if this does want to respect the ATR levels on the think or swim side of things here, what you could expect would be it to hit that +1 ATR of 625. It's above the call trigger for February. It's showing every motion toward it, but can it reach there? Obviously, just because it's there, it doesn't have to. But again, if it were to stretch that full +1, that brings it to 625. We'll see if it can get there or not. And for now, the March, speaking of spicy, the March ATR levels are looking just that. Call trigger at 630 at the moment, an interim ATR level at 768, and then a +1 all the way at 906. So well beyond the levels that we have, accounted for here on the chart, and even well above that sticky 7 zone that I was talking about. Even this 768 is leaves that sticky zone behind. So to the flip side, the -1 ATR takes you down into the negatives. So that does make a ton of sense at the moment. And even the put trigger is all the way down at 176 for March for the time being. Put trigger down at 460, right? So that seems more within reasonable range. But even then, that has the -1 ATR all the way down at 184, which feels like kind of out of bounds, but who knows? With a stop in between at 322. So just to mention the downside levels, to not try to paint too much of a copium or a hopium or an overly bullish perspective, but it has been a really good motion so far. That volume worries me a bit. We'll see, how that plays out in the days ahead, and where that volume, if it's going to persist, where is the kick up in the volume going to come from? I don't know that it comes from people dollar cost averaging up.
And so if that's the case, then where does it come from? We may find out. We'll see. All right, folks. Well, I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.